Good morning, everybody. Welcome to the show this morning. It's me, Chris Beecham. I'm joined again, as it's Thursday, by Axel, who was valiantly holding the fort yesterday by himself. Thank you, Axel, for
No problem,
flying
Chris.
solo. Did you enjoy yourself?
Certainly did. Yeah.
Good. I'm so pleased. It is GDP morning for the UK. Another miserable set of numbers. 0.1% for Q4. So that's quite depressing, really, and missing its targets.
Of 0.2, yeah, and for the year as well.
1.5 was the target for the year, so that's not great, really. What have we got moving this morning on the FTSE 100? We have, if you're looking at the movers on my screen, you can see here. Let's see if I can get this at full screen. We are St. James. What's moving top of the? Let's get this on. You can see that. Hopefully, you can share my screen at some point. There you go. Sorry, 4.7%. Our RELX after numbers this morning, as you can see, that puts the teeniest dent in that chart, doesn't it, Axel?
Yes, it's still looking very bearish, though. I mean, this is the sort of trade you don't want to fade, I don't think, because the downtrend's been so strong over the last few weeks, especially, that even today's positive results are not really going to make a dent in this chart, I don't think.
It's quite grim, to say the least. Other movers this morning, St James's Place up 3% after being clobbered. I think that's the word we can use yesterday for them, because that was that candle yesterday on them, on the AI fears. Everything seems to be terrified by AI at the moment. Otherwise, other movers, miners up a little bit this morning, Lloyd's up 1%, Ashtead up 1.4%. So an interesting set of movers on the top end. On the bottom, Rentokil down 3.7%, British American down 1.4%, GSK down 1.4% as well. So a little bit of a selling. Unilever had numbers as well this morning, and they are down 1% as well. So there we are.
Yeah.
What do we think of that, Axel?
Well, not very exciting, really, is it? I mean, if you look at the other markets in Europe, they're much more interesting. The CAC hitting an all-time high. DAX and other stock indices being up over percentage points, so that's much more positive. Obviously, following the lead of the US yesterday, which didn't do so well after the US non-farm payrolls, the delayed non-farm payrolls from Friday, basically came in stronger than expected, and thereby pushing back rate cut expectations back to July, I believe, isn't it, or June?
Yes, July now for the first rate cut. So that was the interesting thing about yesterday. Obviously, we should talk more about it. The US futures stronger this morning across the board. In fact, almost everything's stronger this morning, apart from the Nikkei, irrelevant because it was a new record high about 24 hours ago. But yes, so stronger than expected payrolls, unemployment not getting weaker. Weaker unemployment, stronger unemployment.
4.3% instead of 4.4. Yeah.
Get my phrase in the right way around. And that has really meant that you do expect the Fed to cut in July rather than June. But the key thing was how markets reacted, because you had the initial euphoria in the futures in the wake of it, and then the sell-off when the cash open started.
Yeah.
So you had a sort of, we can live with later rate cuts because the economy is good, and then suddenly, actually, no, we are more bothered by the concept of later rate cuts. And then, as markets often do, reverses itself again. So the reminder there for payrolls, of course, the old cliche with payrolls is the first move is the wrong one. Turns out the first move was the wrong one. The second move was the wrong one as well. We're only now finding out. In fact, the first move was right in the end. So this is always that danger when you're trading events like payrolls. There's a sense of, I know people have said this before, if you go long and short into the event because you're bound to be right one way, frequently you're stopped out both ways, aren't you?
Yeah, depending where you put your stops. But yes, there is a lot of volatility around it. It's not probably the safest way to trade, to be honest. But what's interesting also, if we can look at my charts, I don't know whether we can, but on the US dollar, you also had a spike higher, the dollar rising slightly. But then, as you can see here, we're just resuming the descent that we've been in over the last few weeks and also over the last few days. So again, if I go into a shorter term chart here, on the hourly, we can see the move up. Payrolls taking us all the way up here towards 97 on the basket, and then basically just trading sideways. Nothing really much happening.
It's really calmed down a bit, hasn't it?
Yeah. So yes, I mean, not much really going on with regards to the US dollar. As I say, the medium-term trend is still bearish, and with regards to US yields, I mean, they did come off a bit earlier before payrolls.
Yeah.
But,
Where are we with yields at the
I
moment?
thought
Because
we went to 4.14%, I think, 2 days ago. But since then, I haven't really looked, to be honest.
and again, the fact I haven't looked at it shows you that it's just not featured in the news,
No.
has it really? We did our yield tantrum last year, and it seems to have dropped off again. And so that sort of sense of when yields get to a certain level, usually predefined by the person wanting to make a fuss about it, that means bad things will happen. It's usually the way it's phrased. At the moment, we are on the 30-year at 4.8, 4.18 on the 10-year.
Yeah.
So, yeah, yield, it comes and it goes, doesn't it? The panic over yields. And at the moment, it seems to have gone away again.
Completely. Nobody talks about it anymore. I mean, we had this flare up in global yields because of Japanese 30 and 40 year bond yields hitting all-time highs a few weeks ago. But now with the election victory, I mean, astounding victory by the current prime minister,
Yes. Clean sweep.
what we've seen is yields in Japan rise, the yen strengthening, and the Nikkei hitting a new record high, about 58,000 now, who would have thought? And if we go back to my chart, what we can see here is also this whole political play on the chart, because you can see here, since the election, we've seen a very, very strong rise in the yen. So US dollar against the yen falling, and we went all the way from around 158 sen to the dollar to around 153 at the moment. And what is interesting on this chart is that the intervention we saw, or the possible intervention, probable intervention, with the Fed, apparently, we don't know yet officially, but that happened, towards the end of January. We had this first really sharp move down, and then the carry trade sort of continued, and we tried to go back up towards the highs. But now with the election result, it does seem to be more toppish here. And the question is, can we hold above the low seen at the end of January? Because if we can't, from a longer term perspective, we may well see a reversal with the yen strengthening further in the coming weeks and months.
Because the news is in the price.
Exactly.
And because there's not much more they can do, really,
Yeah.
to change the story around it, I suppose, is the key thing to look at this point. So that's a very interesting one to watch, because it does tend to have ramifications far and above in just Japanese assets, doesn't it? Dollar yen as the funding currency for so much.
Yeah.
It has to be important. You have to keep an eye on that, really, even if you're not trading the yen itself. It's a key one to look at. We should look at the pound this morning off the back of the GDP numbers, because though they weren't great, you do actually have
Not much happening, to be honest. I mean,
136
yeah.
pound against the dollar. So holding up, it was, and it's continuing its move higher. Let's put it that way. I think if you look at, we were probably overextended above 138. We've come back down again, despite, of course, a BOE that is sounding a lot more dovish. Anyway, from last week's meeting, expecting to continue cutting rates. We just need the governor himself just to tip into that, don't we, really? To be a fan of cutting rates. So that's the key thing to watch out for there. So 136. And then on the euro as well, benefiting from the dollar weakness. Similar story, I suppose, really.
I mean, the euro is testing its highs from late January, basically, and you can probably see it better on my chart here, but not much taking place here, because basically we're just trading around this resistance area here, and we need to basically take out the high at 87.45, which we made on 21st of January, for us to head back up again towards the 88.50 area. So we're back in November of last year. But from a technical perspective, it is a bit interesting, because basically if you look at the downtrend that we've had since November, we seem to be trying to break through that at the moment. So that could be encouraging for those who want to be long the euro versus the British pound.
Showing some signs of momentum on that side, really, this morning. One that I was talking about just before the show, that has sort of escaped our notice, or certainly escaped my notice, was the CAC, which is now is that a new record high as well? Yes, I think it is. There you go. France 40 has had an absolute, because we're down at 8,000 beginning of February, or near as 8,020. Now find ourselves at 8,400. When people talk about rotation, I think this is kind of what they mean, because all the ink gets spilled over tech stocks, and what they mean. And quietly in the background, France and actually Germany this morning up nearly 1% in early trading. European stocks continue to do well. And as well, before the show, we were talking about European stocks and rest of the world stocks versus the US. And this is the longest period of outperformance for non-US stocks since 2009 at about 49 weeks, which shows you how strong both US stocks have been in previous years and how strong and how well non-US has done since, of course, Tariffgate last year.
Yeah. We're seeing the same in Asia. I mean, hitting record highs. I think the Kospi again this week. So it's just powering ahead.
Yeah, and the Nikkei, of course, breaching 58,000 for the first time this week. It did briefly overnight on the Sunday, but certainly in Wednesday's session, it did hit 58,000. So record highs there across the board. But it's a very solid session overall, really. So it's notable that European markets have done so well. Back to the movers to see what we've got. Of course, the top one, as you'd expect, Schroders this morning. If you have missed this news, it's the news that Schroders has agreed to tie up with a US firm. I think it's called Nuveen off the top of my head. I think is the one, if I can find the release. I was looking at it this morning. They are being taken over for £60 a share. So there we go, by Pantheon Bid Company, Nuveen, Teachers Assurance and Annuity Association of America. So it's a cash acquisition by them. So that will see, I expect, another famous name depart from the FTSE 100. But there's your big mover of the day. That's bound to give the FTSE 100 a bit of a boost, even with its relatively small weighting in the index. Otherwise, leaderboard mostly unchanged from where we looked at it a little while ago. Commodity prices we should talk about briefly. Gold down a little bit this morning, so that makes a little bit of a change from the modest gains you've seen the last couple of days.
Yes, but what is really interesting on this chart is that basically you haven't had any volatility for the last 4 days or so.
No, everybody's scared out of it.
Exactly. And if we go on my chart, we can see that the same happened on the silver chart here. Basically, well, they're not showing my chart, but it doesn't really matter. Yes, thank you. So yeah, again, grinding higher, but very low volatility. The danger with that happening is what happened last week, where we sort of grind higher for 4 days, and then we get this big candle to the downside. So the question is, are we going to see another one of those, or is that it now? I mean, from a medium-term perspective, the uptrend is still intact in silver, provided we stay above last week's low. But that's, again, quite a long way away. You know, if you look at the volatility we've had over the last few weeks, it's been unprecedented.
Yeah, you become inured to the volatility, don't you, really? Because the way the candles affect the chart and how it affect the way you're thinking about it, because that is still what, if you go back down towards those recent lows, that's about, what, 20%?
Yeah, it's a long way down. I mean, we're at 84 now.
Silver, as we should refer to it properly. But yeah, it does feel like there's another shoe. Well, it sort of feels like there's another shoe left to drop, doesn't it, really, I think? But of course, it's just human psychology. You're sort of cautious, seeing that tentative move higher. It kind of screams cautious buying with awareness that we probably haven't seen the end of the volatility just yet.
Which is why you need pretty tight stops, I guess, if you were to go along here. And what is also interesting is the oil price, because there we are, in the short term at least, breaking out of a sort of triangle pattern here. Yes. But now that we've gone towards the apex of that triangle, it maybe isn't even a triangle, because usually it's supposed to break out in the first 2/3 of the pattern. It hasn't really, it's in the end bit here. So maybe that's just a consolidation phase, just sideways trading. But the momentum is still pointing higher, because we are still rising. We still have a series of higher highs and higher lows. So interesting, because at the beginning of the year, everybody was, including me, bearish oil.
Yes.
And clearly positioning was so bearish that the geopolitical tensions due to Donald Trump led to this big up move. And now that we're up here, we're not coming off again, even though the tensions seem to be quieting down a bit.
This is probably the longest move higher we've had in oil since, well, May and June, when we had those spikes. But this feels a lot more measured in its move, whereas this was obviously very much headline driven over the Iran-Israel conflict in the summer of last year. This is more steady, more the kind of thing you probably see as people moving back into oil, if only because everyone was so bearish. As I think we were saying some weeks ago, fund managers were underweight energy stocks very broadly going into the year. So it's natural to see perhaps a revival of that. The headline news yesterday and all was that the US is asking another aircraft carrier to, well, will order another aircraft carrier, should I say, to the Middle East in about 2 weeks' time. Although it will then take another 2 weeks to get there. So we're looking at another month of this. Will they, won't they? Because we had Netanyahu in Washington yesterday talking to President Trump, and that was raising fears that some kind of coordination is going on. But looks like the talking continues between the US and Iran, which is sort of keeping a lid on oil prices. Although, as you can see, the direction of travel is firmly higher and has been since the beginning of the year.
I mean, if we look at my chart of the oil price, what is interesting here from a technical perspective is basically the fact that we are very close to this resistance. And we topped out in this area in September of last year, at the beginning and end of the September here. You can see, and also at the end of January. So as long as we don't go above the end of September high at $66.32, which is here, that still could cap the upside. But if we were to do so, technically speaking, we'll probably head towards the July peak, and that was around $70. So there is further upside here. The question is, will it be, as you just said, triggered by geopolitical events, or will it just be positioning?
Yeah, and it could be indeed both of those things, really. But it's enough to tip those things over the edge, really. We should talk briefly as well about poor old Bitcoin now. Moving below 67,000 overnight. Did go below that yesterday, but again, whereas with gold and silver you've got a drift higher, this is definitely a drift lower. You had the bounce last Friday that took us from 62 to about 70 in the space of one session, and then it's just evaporated, isn't it? The momentum has just disappeared.
Yeah. I mean, as you said before, the interest in Bitcoin seems to be slightly waning, because if you want to, you could invest in precious metals instead of looking at Bitcoin and other cryptocurrencies. So the interest over the last few weeks has been far more focused on gold, silver, copper, and so forth. And that's perhaps why institutional investors at the moment are not piling back in to Bitcoin. Also, if you look at previous corrections with regards to Bitcoin, they have been in the sort of 70%, even 95% area.
Yes.
I mean, that probably we won't see again. But, if we see something similar to what we saw in the past tops, we could easily go back down to $50,000.
Yeah, and the last substantial one we had in 2021, 2022 was 13 months on this monthly candle. Now, of course, history doesn't always repeat itself, but it does rhyme, as the old saw has it. We are now down 5 months in a row here. Thus, if you want to blindly extrapolate from one to the other, which you probably shouldn't do, but nonetheless I'm going to do it anyway, is another 8 months of pullback, which takes us to October.
Yeah.
And in percentage terms, that was 80% decline, peak to trough. And again, that would take us down to, I think it would be about 33,000
on
Bitcoin, which is not a prediction. It is not to say that is exactly how it will pan out. But obviously, when you're dealing with Bitcoin, this is the kind of thing you have to bear in mind, that we keep saying this, it has been seen before. Bitcoin's obituary has been written before. It has been written already this week by the Financial Times, most notably amongst others. But it could be that this goes again. And it's also an instructive lesson for investors of all types, because it's that idea that what's halved once can halve again. It's simply the way things work, and simply because something is cheap, and that's maybe relevant to a lot of software stocks at the moment. It's cheap, it can get cheaper.
Which is why you shouldn't then double up on your losing position, hoping that you'll average in and it's going to be fine.
Never to average in, exactly. So there we are. What have we got on the list of things happening today? Of course, it's Thursday, so that means you get weekly US jobless claims. Then also 3 p.m. existing home sales. So nothing top draw. Earnings Coinbase tonight, which will be inevitably an interesting one given the recent decline in Bitcoin. But it is really now all steam, full steam ahead rather, towards US inflation tomorrow at 1:30. So that's your next key event to look out for, really, isn't it? Thank you very much, everybody, and have a good day.